Okay, so you want to own a gym. You picture it clearly. The 5 a.m. regulars who nod at you like your family. The playlist you control. The sound of plates hitting the floor. Maybe you're a lifter yourself, and you spent years paying someone else $40 a month for the privilege of using their equipment. And you started thinking, why not flip the equation? Why not be the one collecting the checks instead of writing them? Here's what the fantasy skips over. The average gym loses roughly a third of its entire membership base every single year. Whether the gym does anything wrong or not, the treadmill that costs $12,000 starts breaking down the moment the warranty expires. And the business model, at its core, depends on selling something to people that most of them will quietly stop using within 6 months and keep paying for anyway out of guilt, or stop paying for and cancel, either one hurting you in a different way. By the end of this, you'll understand exactly why gyms are one of the strangest businesses in America. One where the ideal customer, financially speaking, is someone who pays every month and never shows up. What kind of gym are we even talking about? Just like ranch hides a dozen different businesses, gym is doing the same thing. A big box commercial gym, the kind with a pool, a basketball court, and 3 floors of cardio equipment, is a real estate and volume business. A budget gym, the Planet Fitness model, is a completely different business built on low price and deliberately low attendance. A boutique studio, the CrossFit box, the yoga studio, the boxing gym, is a community and coaching business that happens to have equipment in it. And a personal training studio is barely a gym at all. It's a service business that rents floor space. These are not small distinctions. A budget gym wants members who never show up. A boutique studio depends on members showing up constantly because the coaching and the community are the entire product. This script is going to focus mainly on the independent commercial gym, the one most people picture when they say, I want to open a gym, while pointing out where the other models diverge, because the divergence is where most of the money gets made or lost. The bill before you open the doors. Industry data on gym startup costs is wide because the category itself is wide, but the range that shows up again and again for an independent full-service commercial gym is somewhere between $150,000 and $500,000. A lean boutique studio, something like a yoga or martial arts space with minimal equipment, can open for $30,000 to $150,000. A full commercial gym with a cardio floor, a free weight section, and group fitness rooms routinely runs past $300,000. And a specialty format like an indoor climbing gym, which needs structural wall construction and safety engineering, can blow past $1 million before a single membership is sold. Break that down, the biggest line items become obvious fast. Commercial lease space for a gym typically runs somewhere between $18 and $40 per square foot annually, and a real gym needs somewhere between 3,000 and 10,000 square feet just to have room for equipment, classes, and locker rooms. On a 5,000 square foot space at the middle of that range, you were looking at over $100,000 a year in rent alone, before you've paid for a single dumbbell. Add a security deposit, typically a month or more up front, and the landlord hasn't even handed you the keys yet. Then comes the build-out. Commercial gym flooring, rubber matting rated for dropped weights, costs real money per square foot. You need locker rooms with plumbing, which means you're now paying a licensed contractor, not a handyman. You need HVAC sized for a room full of people sweating simultaneously, which is a very different load calculation than a normal retail space. You need sound systems, security cameras, and access control so members can badge in at 5 in the morning without a staff member present. Depending on how much the previous tenant left behind, build-out alone can eat 30 to 40% of your total startup budget. Equipment. Buy once, replace forever. Equipment is the part that feels like the fun shopping trip and turns out to be the part that never actually stops. A mid-sized commercial build-out of equipment, cardio machines, racks, plates, benches, typically runs $30,000 to $100,000, and that's before you decide whether you're leasing or buying outright. Leasing keeps the upfront cost down and usually includes maintenance, which sounds appealing until you calculate the total cost over 3 or 4 years and realize you've paid for the equipment twice. Buying is cheaper long-term if you maintain it well, but every treadmill belt, every cable machine pulley, every piece of rubber flooring is a wear item with a countdown clock attached to it. This is the detail new gym owners consistently underestimate. Equipment doesn't fail all at once. It fails constantly, in small, expensive increments. A treadmill motor burns out. A cable snaps mid-set. An elliptical's display panel dies. None of these are catastrophic on their own, But a gym running 15 or 20 pieces of cardio equipment will have something broken essentially every week of the year, and every out-of-service machine is a small, constant tax on the member experience. Let 3 machines sit broken for a month, and you'll start hearing about it in cancellation reasons. The membership machine and its most peculiar economics. Now we get to the part of this business that makes it genuinely unlike almost anything else you could own. A gym sells a product built on optimism. The customer joins believing they will use it, and the business survives, in large part, on the fact that many of them won't. Industry data on gym attendance is consistently blunt about this. A large share of members, by some measures the majority, essentially never show up, or show up a handful of times before quietly stopping. This is not a bug in the business model of a budget gym. It is close to the entire business model. A low-cost gym charging $10 to $30 a month can only survive on that price if a large fraction of its membership base doesn't actually use the facility, because the physical space simply cannot handle everyone who's paying for it showing up at once. The math only works with a mix of dedicated regulars and dormant payers subsidizing the electric bill. That creates a strange incentive structure. In a normal business, a customer who stops using your product is a warning sign. In a budget gym, a member who pays and never comes in is close to the ideal customer, because they cost the business almost nothing in wear, water, towels, or staff time, while still paying full price every month. The moment that member notices they haven't been in 6 months and cancels, that's when the gym actually loses money, not before. Boutique studios and full-service commercial gyms don't get that luxury. Their pricing is usually high enough, and their space small enough relative to member count that they need people to actually attend, both because attendance is often part of what's being sold, and because a facility that feels empty doesn't retain members either way. Churn, the leak that never fully closes. Here's the number that should be tattooed on the inside of every prospective gym owner's eyelids. Industry benchmarking on health club retention puts the annual retention rate for the sector at somewhere around 2/3 of members, meaning roughly a third of the entire membership base turns over every single year, even at a well-run facility. Some sources put annual churn even higher, closer to 40% industry-wide. Either way, if you open with 1,000 members, you should expect to lose somewhere between 300 and 400 of them over the next 12 months, regardless of how good the facility is, just from ordinary life circumstances: moving, injury, motivation fading, a cheaper competitor opening down the street. That means growth isn't optional, it's structural. A gym that isn't actively signing new members isn't standing still, it's shrinking, because the churn never stops. This is why every gym you've ever walked past has a sign about a New Year special or a no-commitment trial. They are not being generous. They are running to stay in place against a leak that opens up again every January and doesn't fully close for the rest of the year, which is also why January signups and January cancellations both spike in the same data. A meaningful share of new members quit within the first few months. Some data points to roughly half of new joiners lapsing within 6 months, which means a big chunk of the members you fight hardest to acquire in January are already gone again by summer. What actually pays the bills? A membership-based gym has one primary revenue stream and several smaller ones layered on top. The primary stream is the recurring membership fee itself, and the range here is enormous depending on positioning. Budget gyms in the Planet Fitness mold price around $10 to $30 a month. Mid-market full-service gyms tend to land closer to $50 a month on average nationally. Premium and boutique operators, the Equinox end of the market, charge $200 a month or more, sometimes considerably more, because they are selling an experience and a status marker as much as a workout. On top of base membership, the real profit engine for most independent gyms is everything sold after the sign-up. Personal training sessions, sold in packages, typically carry far higher margins than the membership itself because you're monetizing a trainer's time directly rather than spreading facility costs across thousands of members. Group class add-ons, nutrition coaching, supplement and retail sales at the front desk, and initiation or annual fees all stack on top of the base number. A gym that only sells memberships and nothing else is leaving a substantial share of its potential revenue on the table, which is exactly why walking into almost any gym in the country means walking past a supplement shelf and a personal training sign-up sheet before you reach the equipment. The cost side, every single day. Rent and staff are the two costs that show up whether a single member walks through the door or not. Staffing for a small to mid-sized gym, front desk, trainers, cleaning, management, typically runs $3,000 to $10,000 a month, and that's before payroll taxes and benefits. Utilities for a facility running HVAC and lighting across several thousand square feet, often with showers and laundry for towels, add another meaningful line every month. Insurance, specifically liability insurance, is non-negotiable in a business where someone could genuinely injure themselves under a barbell, and premiums reflect that risk. Then there's the maintenance line that never shows up in the initial business plan at the size it deserves. Equipment servicing, flooring repair, HVAC upkeep for a system running harder than almost any other commercial tenants, and periodic recarpeting or repainting to keep the facility from looking tired all draw down cash continuously. Marketing is its own permanent line item too, not a launch expense. Because of the churn number covered earlier, a gym has to keep spending on member acquisition indefinitely just to offset the members walking out the back door, with industry guidance often suggesting something in the range of 5% of revenue go toward marketing on an ongoing basis. Put the operating side together for a mid-sized independent gym: rent, staff, utilities, insurance, maintenance, marketing, and you're commonly looking at total monthly overhead somewhere in the tens of thousands of dollars before a single dollar of profit shows up, which is why industry sources consistently point to a break-even timeline of 12 to 24 months for a new gym, not 12 to 24 weeks. Margins, thinner than the branding suggests. After all of that, what's actually left over? Industry figures on gym profitability tend to cluster around 10 to 15% net margin for a well-run, established operation. That's a real business, but it's not the kind of margin that forgives mistakes. A boutique studio, with lower square footage, lower equipment cost, and higher price points, can often reach profitability faster and post stronger margins than a large commercial gym, precisely because its overhead is smaller relative to what it charges. This is part of why the boutique fitness segment has been the fastest growing corner of the industry over the last several years, while traditional big box gyms have had a rougher road. When the floor drops out. To see how fast this business can turn from viable to insolvent, look at what happened to 24-Hour Fitness, once one of the largest gym chains in the country. Going into 2020, the company was already dealing with a slow membership decline and a rocky rollout of a new check-in system. Then, in March of that year, pandemic shutdown orders forced every one of its clubs to close simultaneously. With members no longer walking through the doors, the company suspended monthly billing, and its core revenue stream effectively went to zero overnight, while the fixed costs behind it, leases across hundreds of locations, corporate staff, debt payments, kept accruing regardless. By June of 2020, 24-Hour Fitness filed for Chapter 11 bankruptcy protection and permanently closed more than 100 locations nationwide. The company wasn't a poorly run business by most conventional measures. It was one of the biggest names in the industry, with millions of members. But a gym's entire financial structure depends on people physically walking in and paying every month. And when a single external shock made that impossible for an extended stretch, there was no revenue left to absorb costs that never paused. The lesson generalizes past pandemics. Any gym is one lease renewal, one major equipment failure, one new competitor undercutting on price, or one prolonged membership slump away from the same math turning against it, just usually slower and quieter than a global shutdown. The honest version. A gym is a business where the product is motivation, sold on a recurring basis, to people whose motivation is, by definition, inconsistent. The revenue model only works because a meaningful share of your customers pay for something they'll barely use, and the moment they notice that and leave, you have to go find someone else to replace them, forever, because the churn never actually stops. Run well, with the add-on revenue from training and retail layered on top of membership, and with enough scale or a premium enough position to support real margins, it can be a durable, profitable business. Run on thin assumptions about how many people will actually renew, and it becomes a business where you're perpetually one bad quarter of signups away from the same wall 24-Hour Fitness hit, just without a global pandemic to blame for it.